It's now time for the Bourse Report. Sarodh, I know this morning was a crazy morning. Good morning. Hopefully you'll have some good news to brighten our mood this morning.
Good morning, Hima, and good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we are reviewing the financial results of two of the largest conglomerates in the region, in fact, Massy as well as Ansa McAL, and the results aren't overly stellar. In fact, they have been down a little bit, but the good news is the country is reopening. Countries across the region are starting to become more active, so that could spell some sort of short-term rebound in the very least for some of these companies. So let's get straight into it. And we'll go straight to Massy first of all. And for that, for the half year ended 2020, well, March 2020, Massy reported earnings per share of $2.41 per share, which was actually a 9.4% decline from the $2.66 recorded in the prior comparable period. Revenues on the positive side were up about 2.6% from $6.16 billion to $6.3 billion. Operating profits, however, were down just around 10.9% from $401 to $358 million, and profit before taxes were down as well, 12.5% from $448 to $392 million. And that was driven, according to the group, by two particular extraordinary, quote-unquote, extraordinary events. The first being the sale of one of the group's companies, which include an impairment loss on the valuation of assets. And the second would have been the fallout from the very steep decline in financial markets, specifically related to the financial services segment in March. And as we could investors might recall, there was a very sharp, unpronounced, and very painful decline in financial markets, particularly US stock markets, back in March or thereabouts. Now, by profit before tax by segment, there was some reasonably good performance in some of the segments. The motors and machines segment, the half year 2019 result was $77 million in profit before tax. That increased to $83 million. Integrated retail did jump from $183 million in PBT to $200 million, as you can see on your screen there. And again, that would have been expected to some degree, given higher consumer spending, with restaurants closed, more persons eating at home, etc. Spending on groceries, etc. would have improved. I know I certainly spent a lot more in the grocery, buying stuff to cook at home. The financial services segment, as we mentioned, did decline quite sharply from $61 million in the first half of 2019 to just around $35 odd million. Again, that may have been related to some new accounting standards or relatively new accounting standards in IFRS 9 and the classification of certain financial assets, which would have led to that deterioration in asset values or financial asset values. And gas products was up; they were up quite significantly from $96 million to $110 million in profit before tax. In terms of regional composition, well, not too much by way of change. Trinidad and Tobago remains the major jurisdiction of profit generation in terms of profit before taxes, accounting for just about 45% of the group's profits. Barbados was the only major change, where it would have declined from 21% in the first half of 2019 to 12.4% in the first half of fiscal 2020. And again, that would have very likely been attributable to the booking or the region in which most of the financial losses or the financial services segment losses would have been booked. Otherwise, it's pretty much as you will. Guyana, or the Eastern Caribbean rather, 12.6%, Guyana 15.9%, and Jamaica increasing marginally from 7.1 to 8.4%. Now, at a price of $57.99, Massy is trading at a price to earnings ratio of just around 10.5 times, which is below the sector average of 14 times, and does offer a quite attractive dividend yield relative to the sector average of 3.8%, the sector average being 2.2%. They did cut their dividend, but not significantly in terms of the interim dividend from 55 cents to 50 cents, so just roughly a 9% decline there. But on the basis, despite the relatively attractive valuations on the basis of increased COVID uncertainty, and while economies are opening up, it remains to be seen whether consumer spending patterns will be as normal, even if their disposable income is available. And on that basis, we are changing our rating on Massy from a buy to a neutral. And turning quickly to Ansa McAL, the Ansa McAL Group for the first quarter of 2020 reported earnings per share of 25 cents, which was a notable decline of around 68% from that 79 cents recorded in the prior comparable period. Revenues, on a positive note, were quite stable, just down around 0.2%, from 1.493 billion to just around 1.49 billion. And operating profits, however, did decline at 62.7% from 206 million to just around 77 million. Again, in terms of segment performance, as we turn quickly to the second chart, Ansa McAL's profit before tax by segment, it was fairly consistent across most segments, manufacturing, packaging, and brewing, and that thing declined marginally from 71 million in 2019, the first quarter of 2019, to 69 million in the first quarter of 2020. Automotive trading and distribution actually increased marginally from 36 to 37 million, and the media retail services segment actually increased also from 9 to 10 million. The insurance and financial services segment, however, was the notable decline. And in quite similar vein to Massy, probably the accounting treatment of the new IFRS 9 and classification of assets would have led to a deterioration in values. And again, these are unrealized losses from 86 million positive in the first quarter of 2019 to just around 46 million of PBT losses for the first quarter of 2020. Now, it's important to note that just like Massy, Ansa McAL would have had exposure to international stock markets, and this would likely recover and lead to abnormal or extraordinary, let's call it, gains in the second quarter relative to what is typically enjoyed by both McAL and Massy. So we can expect some recovery there, barring any collapse again in financial market values. So at the price of $54.50, Ansa McAL is trading at a price earnings ratio of 17 times, which is above the sector average of 13.7 times. The dividend yield is not quite attractive at this point in time. It's 0.6% compared to the sector average of 2.2%. Investors would recall that the group took a very prudent and cautious forward-looking decision to opt not to pay a final dividend for fiscal 2019 in light of what was going on with COVID. With some more clarity returning to business operations, we may expect to see some reversal of fortunes in terms of dividend payments in perhaps the near future. So this, because of relatively high valuations, again, there is more clarity at this point in time, but still it's a very uncertain environment, which is leading to adverse economic conditions, but tempered by some acquisition activity, most notably the Bank of Baroda acquisition, which is still pending approval by one of its subsidiaries. Bourse maintains a neutral rating on Ansa McAL. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Check out our website where all of our information and research is absolutely free at bourseinvestment.com, or you can email us at invest@boursefinancial.com. Back to you, Hema. That's it for this investing week. This has been the Bourse Report.